With the U.S. national debt hitting a record $34 trillion and the U.S. consumer breaking a new all-time high at $17.1 trillion of debt, mortgage rates back over 7%, I can't help but wonder what in the economy breaks first. I had the pleasure of interviewing the Uneducated Economist with over 132,000 subscribers on YouTube. Go ahead and show him some support by liking and subscribing, as well as liking and subscribing to this channel. What's up, winners? Welcome back to Stay Winning Podcast. If you haven't subscribed yet, please consider doing so. So, I just met big YouTuber here. Nice to meet you, Hugo.
Nice to meet you, Hugo. I'm Simon, the Uneducated Economist.
Uneducated Economist. How'd you come up with that name?
Well,
is there no economy degree?
No economy degree, no mentors, just my own, just deep diving research and obsession over economics. And I came up with the Uneducated Economist. I guess probably because of that, not being educated in any of it, just, self-educated. And, when I thought of the name, I thought, well, we can keep the expectations pretty low here,
Awesome.
And it turned out to be a pretty good name for the channel.
That is a fun name. That's very creative. Mm-hmm. I like how there's no expectations. You're like, hey, let's see where this goes, right?
Sure.
So speaking of economy, right? Real estate prices depend a lot on supply and demand.
Yeah.
Right. Now, historically, at least in the last decade, we haven't kept up with supply compared to previous decades. Now, I have my thoughts on this personally, but what are your thoughts as far as home prices if rates go up, home prices if rates go down? Mm. Now, I know what I think. My viewers have seen previous videos, but for me specifically, based on supply and demand now, where do prices go if rates drop?
If rates drop, they're going to go up. Prices will go up. There's very little doubt in my mind that would be the case. What was really surprising to me is that the prices didn't dramatically drop when the rates went up, right? That was what everybody was anticipating. And ultimately, I believe that's the supply and demand is the issue. Lack of supply in the inventory of homes. Like if there was more supply, the prices would come down. It's a supply and demand issue. So long as supply stays tight, inventory stays tight, prices are going to stay elevated regardless of the interest rates.
I'm glad I got your thoughts on that. It's always nice to get a second opinion because I like to be questioned. I like to be challenged. Mm-hmm. I like to be like, hey, I don't know everything. If I can be proven wrong, please prove me wrong. Otherwise, how am I going to grow and how am I going to learn, right? So for anyone out there that's afraid to ask questions, I hope you do ask the questions just like I'm asking now for you guys. So, yeah, I saw rates hit over 8% mm-hmm. and prices did not crash.
Nope.
So correct me if I'm wrong, economy-wise, real estate has only crashed once out of the last 6 recessions. True or not true?
Well, I guess that would be true.
All right. There you go. I feel like I'm quizzing you now.
I felt that was kind of a quick trick question.
It's not meant to be a quiz. I do just want to get your thoughts from an economy perspective. Now, we've been millions of homes short before, and I don't see anyone talking about this. So in 2020, we were still millions homes short of the demand. In the last 4 years, we've had an increase in population from the border, about 3 to 4 million of those. Mm. My perspective on that, well, before I give you my perspective, because I don't want this to sound like a quiz, how do you feel that impacts property values?
The increase in the lack of inventory build, it's going to keep driving prices up. Now, this is something that I think is going to be taking place regardless of anything that's going to be happening as far as administration choices or condition changes. This is part of a much bigger economic force that is happening that's separating the rich from the poor. And really, the idea of property prices are moving up, this is due to the abundance of money that's within the system. And there's no better way to actually know that there's an abundance of money in the system than the rents and the leases and the property values going up. This is not something that is going to be a reversal. This is part of the Cantillon effect and a much bigger economic force that will continue down this path of, not only the separation between the rich and the poor, but the ever increasing prices of luxuries, which, although a house is not necessarily a luxury, it is a luxury if you are not one who has one, right? So ultimately, the property prices and the availability to get into those properties are going to be ever increasingly more difficult, but not impossible. As we find here today that there's plenty of opportunity for somebody to get into property if you have the unique perspectives and the strategies that a lot of these people are sharing and stuff. So if you can do that, it's not impossible, but traditionally it's going to be very, very difficult to have your typical job, save up enough, put the down, move in. Not like that. I mean,
Yeah.
not the way it was.
No, I do see those times being over, and the gap widening between the haves and the have-nots.
Yes.
Now, you said a word that stood out to me where the way it's going, it seems unreversible,
Mhm.
right? So the question I get asked a lot is there a breaking point? And if so, what breaks? Now, I have my thoughts on that, but again, I don't want this to sound like a quiz. Let me know, is there a breaking point eventually? And part two, if there is, what breaks?
Yeah. Yeah, there's going to be a breaking point at some point, but it's not going to be a good experience. People aren't going to be looking forward to it. Ultimately, what it's going to take is for the dollar to ultimately lose its confidence, or the people lose the confidence in the dollar, and it starts to lose that world reserve currency status. At that point, you're going to start seeing some really major problems, and property prices could be affected by that moment. However, I don't see that. Like, I don't see that moment coming, and I don't think that's a very I mean, I'm not going to say it's out of the realm of possibilities, but
Yeah.
it's not very likely. It's just like a very far off kind of concept to even go that route. Really, what's going to happen is that there's going to be a way somehow figured out, whether through the Federal Reserve, government actions, some way to get new money into the system, whether that's through printing or some other attempt to try and figure out how to do that. Here in the United States, it's going to be hard to do anything else other than print money. We don't manufacture enough to really contribute to new money coming in. So whatever new money comes in is going to continue to separate the rich and the poor and cause the prices to go up.
Do you feel that's an accident?
No, I think it's an economic force that's at play that's been going for centuries.
Okay. So it's something that's been happening. There's not like some evil people behind the scenes pulling no strings.
Well, there might be some evil people behind the scenes pulling strings who are benefiting from it, but they just happen to be in a condition that's allowing it to happen. Like, they're not the
Okay.
reasonings; they just happen to be taking advantage
That's
of the
a very
situation.
great perspective that I would say makes a lot of sense. All right. So to recap those a little bit, if rates drop, property values go up.
Okay.
Supply and demand is probably the biggest factor when it comes to home value prices.
Yep.
If something breaks, I agree with you. It might be the U.S. dollar,
Yep.
and I see a lot of like scare media, and I think they exaggerate a little bit. I do think if something is going to break, it would be the U.S. dollar before real estate. However, if the U.S. dollar goes, everything else goes.
Everything goes. That's it.
Right? So I feel that too. But I see a lot of these like scare tactics in the media, and I don't think we're that close or that probable yet.
Mm-hmm.
I mean, I know we had the rise of BRICS. Do you see BRICS speeding up anything as far as chaos goes with the U.S. dollars, or do you still see the U.S. dollar holding, at least in the next generation?
Throughout the next generation might be a little questionable because that far out of a timeline. I don't want to like tie myself to, but like 10 years, yeah, the dollar is going to be it's going to continue to dominate just like it always has. BRICS nations is a very low concern of mine. There's, again, when we look back at economic forces, and especially some of these historical ones, Gresham's Law, Triffin's Dilemma, Cantillon effect, there's some things that need to take place in order for a nation to take over as a world reserve currency. And part of that is you have to provide the world with a safe and liquid asset like the U.S. Treasuries, right? And there's no other nation out there that's even going to come remotely close to going in debt like the United States has, right? I mean, this is a very dangerous place to be. But it does provide the world with that safe and liquid assets of U.S. Treasuries, and U.S. Treasuries get used like they're dollars. Right? So people around the world who are doing transactions are using U.S. Treasuries to do that. Now, if you wanted to, say, replace that, you would have to convince the world that they want to buy your debt. So China's going to sell up a bunch of debt to people. You're going to buy it? You're going to buy it? Like, I'm not buying it. I know they won't let anybody else, right? And so if you think about it in that fashion, Triffin's Dilemma doesn't allow it to take place because you got to get that currency out to the world. In order to do that, you have to sell them debt, right? They take that debt, give you money, you take that money, go and buy their stuff. And this is the great circle of life that we're going through. So that Triffin's Dilemma is how do you get that money out to the world? You have to be in deficit trade, right? You have to buy more than you sell. So when you buy more than you sell, you can get the dollars out to the rest of the world. So if there's any BRICS nation out there that wants to go deeply into debt like the United States and then buy more than they sell, they might be able to do the world trade, right? Be the world reserve currency. None of the BRICS nations are wanting to do that. Nobody wants to buy more than they sell. They want to sell all their stuff to the rest of the other BRICS nations. And so that right there is going to be a very difficult thing to then take over the United States from what we're doing, which is providing the world with the dollars that they need. And no other nation wants to do it like that.
I really like that perspective that you brought out, which brings me to the question of the petrodollar, right? So we know some of the BRICS nations are really oil rich. Do you see oil being traded in their currency?
Sure. Yeah, no, absolutely it will, but it's not going to be anything meaningful. Again, we have to think about it from the world trade. If you have a dollar, everybody wants dollars. Now, yeah, there is BRICS who are like, hey, I don't like dollars, but we do. We do. And so,
Yeah.
Russia's the only one who really is just like that adamant about, and they probably want dollars too, but they're, being sanctioned and all that. So there's this idea that nobody wants dollars, but that's not the truth. They all do want dollars. And so when these nations decide that they're going to start doing business within their own sovereign currencies, something very interesting takes place, in that like Russia is buying or selling oil to India. India gives them rupees, right? So now Russia's sitting on a bunch of rupees that nobody in the world wants.
Yeah.
So now what does Russia do? Like, they have to do something with these rupees, right? So there's a couple of things they can do. They can like, hey, we're going to sell these rupees and get something else that somebody else wants, right? So you can literally just sell them out on the market, which is like basically setting it on fire, because the more you put out there, the lower the value goes. And so you're like, basically shooting yourself in the foot by doing that.
Yeah.
Or you can try and find somebody who will take it from you, which nobody does except for India. So now you have to invest in India or buy their products, right? It's a great deal for India, but nobody else, especially Russia.
Yeah.
So if you look at it in that fashion, doing deals in their own sovereign currency is not going to work out for them very well. Like, they can do it, but like any kind of meaningful, like continuous trade in that isn't going to work. They have to have a common currency, and there's nothing that's going to replace the dollar.
Okay. I'm glad you addressed that. It is a question I get asked a lot on X. But let me transition over to a little bit from that. One, do you do any foreign exchange trading at all?
I don't.
Okay. Well, maybe you should look into
Yeah,
that.
right.
Number two, you were speaking about the reserves and the treasury with the U.S. So El Salvador's official currency is the U.S. dollar. Recently, with Bukele, who just got reelected, implemented Bitcoin as another official reserve currency of El Salvador. What are your thoughts on that?
Well, the dollar will be okay.
So the dollar will be okay
for their currency.
And then as far as their economic impact, now that they've implemented Bitcoin, who has a limited supply, and they have gotten it out to their people through mobile apps and things like that. Are you able to speak on that, or?
Sure. Fixed currencies don't do well.
Okay.
They do well for the most industrious people, right? Because they're able to produce their products, their services, whatever, and acquire that currency, right? If you start hoarding that currency, what it does is it depletes the rest of the economy from having a currency to trade with. This is one of the reasons that the gold standard was eventually eliminated, due to the fact that the liquidity issues that came from a limited amount of gold meant that world transactions were only limited to the amount of gold that's available out there. This is where the dollar stepped in, started providing that liquidity. And once you have too many dollars out there in the system, and everybody realized it, they were like, okay, well, we got to sever this gold thing. This is actually called Gresham's Law. This is where bad money chases out good. Right. So in order to have bad money chase out good, what ends up happening is you have two currencies that are basically accepted. And let me give you an example of it. If I'm a merchant, right, and you have a gold coin and you have a stack of cash, and you want to buy something from me, and you say, hey, will you take gold or cash? And I say, I'll take either one. Yeah. Which one would you give me?
Probably the cash.
Probably the cash, right? Because you want to keep the gold coin. Exactly. This is the same answer I've gotten from every single person in the entire world that I've ever asked that question to. Yeah. So what ends up happening is the gold gets hoarded and the cash goes into circulation. Bad money chases out the good. The good gets hoarded and the cash goes into circulation. So now this is the same thing that you're going to find with Bitcoin, right? Same thing. Bitcoin's a good currency. Cash is a bad currency. Good currencies can't chase out bad, right? But they can in Thier's law. So Thier's law says that once the current currency has completely collapsed and is no longer really accepted, then the good currency can come in and start being used. So in that sense, if the dollar fails to be existing then the Bitcoin can step in and be useful. Other than that, Bitcoin's a great individual person's holdings. Like, I'm a huge believer in Bitcoin as a personal holdings, right? My expectations of it are really low. So that works out pretty well for me, right? I get to buy it, not worry about it, just stack it up there and, essentially forget about it. And I do the same thing with silver too.
Awesome. I am a big fan of silver. I'm glad I got your thoughts on that, because the Bitcoin ETF just came out recently, and a lot of people would be like, oh, fight the system, buy some Bitcoin. But then to touch on the points you were mentioning, the people that hold the most Bitcoin are the people at the top,
Yeah,
the people that you supposedly want to fight with a different
that's
currency.
right.
So I believe that's a great example what you mentioned as far as like the limit and how that can be bad
Yeah,
because it doesn't move that much. Everyone's hoarding it, and now everyone at the top is hoarding it because I believe Bitcoin was like what 51,000.
yeah,
You know,
something like
we,
that.
we
It's quite
can't
a bit.
buy it. You know, it's not easy to buy. It's these big corporations are able to buy it like nothing compared to me, who's like, oh, let me buy 0.0005 of it. So thank you for bringing that example.
Yeah,
I
you
hope
bet.
that enlightens some of the viewers that are thinking of investing in Bitcoin. They're concerned about the economy, whether it's in real estate or whether it's about the U.S. dollar. Your words have been very wise today, and thank you
Thank
so
you.
much for your time. And I'm
Let me
so
add one
glad.
more thing for the BRICS nations, just
Let's
because
go.
I know it's such a big topic for a lot of people. I challenge somebody to, if you're really worried about the BRICS nations getting out of the dollar and abandoning the dollar, do this. Google any one of them, besides maybe Russia. Brazil, dollar-denominated debt. India, dollar-denominated debt, right? Just type this, South African dollar-denominated debt. Put those into the Google search and start looking through some of the articles that you read, and you're going to find that all these nations are now taking out debts in dollars, right? That means they're due in dollars. So even though they want to get out of the dollar, for the next 10 years, Brazil has to come up with some sort of dollars in order to pay those debts back. This is not dollar weakness. This is dollar demand, right?
All right. So Brazil and what? One more time.
So like Brazil, Russia,
Oh no, as
India.
far as what to search,
Oh, put in,
denominated
yeah, so put in like whatever country,
yeah,
dollar denominated debt, right? And
dollar
so
denominated
this
debt.
is literally like a country issuing out what would be equivalent to like a US Treasury, right? So
Mhm.
it's Brazil's debt that they are selling out there to the world that says US dollars on it, right? Not any other currency, but US dollars. So they get dollars when they sell it and they have to pay back in dollars. And it doesn't have anything to do with the United States.
I'm so glad you added that there. I think that would be a great search after this video
Mhm.
to go ahead and look up. Again, thank you for your time. It's been a
Yeah, you
pleasure
bet,
meeting
man.
you. Thank
You
you for
bet.
your wise words.
Thank
Enjoy
you.
Vegas.
Yeah, thank you.